Hello, you trader nerds. Keep a smile on your face. The market is up almost 1%. We have the weaponization of the American justice system. We're on the verge of World War III with Russia and Ukraine and China wanting to get involved. We can't afford a carton of eggs, but yet the market is bullish and we are up 1%. Now, let's look at the big green monster, which we will retire after today and go into the next week with a brand new big green monster that we will redraw on Monday. But this says that we are oversold for the fair market value above. This, ladies and gentlemen, has now gone from bearish to bullish, though we might fill in some of these little things. But this thing wants to now go higher. We shall see. I was thinking that we would pull back into this area and go back to the point of control. But when you are oversold, that suddenly becomes bullish. Now, how's this going to look when we redraw the big green monster? I don't know. We may be fairly priced. So we'll see how it looks like tomorrow. So we can't really put too much into the big green monster, but we know that our linear regression chart has been nothing but bullish. And I thought I had it ready, but apparently I don't. Let's see. Where is my big green? My linear regression chart. What's wrong with my linear regression chart? What is wrong with this? Spider, S&P, ETF Trust. What the crap? What is this? Where's my stuff? Where is my, I can't even make heads or tails of this. I don't know why that is. I don't want SPY. I want the E-minis. And how do I change the E-minis? I don't know how to do that over here. Anyway, my chart don't look right. So I'll fix that at some point. But I wanted to show my E-minis. And I normally have something up here showing me all my stuff. Oh, here we go. View only mode. I don't want the view only mode. I want the view mode. I want Sweet Bobby. I want here home. Okay, now let's go to community. Let's go to products. Let's go to chart. Let's see if this will fix it. This looks better. S&P E-mini futures. But why is my stuff not on my screen? What is the world? What is the problem? My view's messed up. Here we go. Main chart. That's where I want it. Where's my indicators? Let's see. Here we go. That looks much better. So now we can see that clearly we are in an uptrend now, right? We've survived Vomageddon that happened somewhere around this area, and we are now clearly wanting to go up. So all signs are we are bullish for spring break week coming up, that my kids will be here, and y'all will hear them in the background all next week. Let me take a big old sip of American sweet tea. All right. So here we go. So don't let news of the day get you down. Don't let news of the day destroy your little happiness. Everybody stay good. World War III or not, we're all going to be fine. All right, where were we? So let's see how our little things are doing today. So let me check out our Tasty account. Let me pull it over to the side. Now, Ed is in here. Ed, you had something groovy to show me about how to hide all my account numbers and stuff. And I don't know what Ed, I think Ed was drinking last night or something, because he was like, Bobby, I got this thing that I'm doing. I'm like, oh, no, Papa has unleashed some technology on us. All right, Papa, what do you want me to do?
Yeah, I shared this with Evan earlier today as well. If you have the Thinkorswim platform, when you're looking at a chart, you have the option to keep your data box in the chart itself. And it'll show you, and it's been a while, but it's in the settings thing. Go to your settings cog in that chart. No, go in that chart right there.
Right here?
No, the cog though. Go to the cog.
The cog.
I'm fishing. I don't know. Anyway, go in there.
Let's
look at this.
Come on, Papa.
Papa
on technology.
Somewhere. Look around a little bit. Look around a little bit.
What am I looking for, Ed?
So look, data box. You see data box off. Turn data box on. All
data
right,
box.
You put me on the spot. Old man's gonna wing it for you here.
Did I do fixed or floating?
Floating. I think floating. Try floating and see. So hit apply.
If you do floating, it's going to follow your cursor.
Oh, right, we don't want that.
Evan,
look at that.
You.
Oh my
Evan,
God.
right,
what
back.
Is that? What are y'all doing to me?
Hey, go back in.
All right, Papa. We're going to go to fix.
I took a pot shot and Evan bailed me out. So yeah. See that box? Now you can shrink that box down. Don't go to the X. Yeah, shrink it from somewhere else.
Oh,
Shrink it.
shrink it. And you said I
Now
can put it on my screen, right?
Yeah. So put that thing over your account number that you have blocked out right now.
Right up here.
Yeah, where it says,
Uh-huh.
yeah, right there.
Yeah.
Now click your platform below it.
Yeah.
So now you can
Oh,
go in all over the place, right?
look at
Go to your
that.
monitor tab.
Look at that.
See, so you can keep your account number blocked. So if you want to show us your stuff, you know,
Ed, look at you.
sometimes you want to show cash and sweep.
Yeah.
You can now do that because your account number will be blocked. And drum roll, please.
Yeah.
If you bring up your Tasty platform, this thing will stay on top of the Tasty platform as well. As long as that pin is pointed where it is, which is straight down, it's set to stay on top, quote unquote.
Yeah.
And you can use that as a little blocker everywhere. So yeah, bring up your Tasty account if you want. Don't, whatever. You just know that it's almost like a virtual blackout. You can use that thing to block your account number wherever you are.
Now, how did you find that out, Ed? This had to be, I mean, this wasn't something you were looking for. This had to be totally by opposite.
Well,
I mean, by chance.
I have this, I have the data. I just discovered it last night. That's why I laid it on you last night.
I mean, Ed, y'all, he was like a Catholic at Easter. I mean, he was so excited.
So I have a data box up and I was looking at some charts and I was looking at the box. I don't do it too much anymore. And I moved it to get something and I realized, holy crap, this thing stays on top of the Thinkorswim platform. I'm like,
And it stays on everything. Look at that. I can absolutely use that. How about that?
Yeah. So,
that is wild.
So you bring that up and just drag it right over your account number. And then you can, now this shows you everything. You don't really have to, you know, show us anything in here typically. But the other account, I know you like to look at your cash and sweep if we're talking about T-bills or whatever else. Sometimes you want to show other things, and this is just a way to smudge out your, it's an added freebie benefit from the people at Ameritrade, now owned by Charles Schwab.
Charleston Heston.
Who I talked to this morning, by the way. They're going to migrate all of our accounts starting this fall. Thinkorswim is going to start migrating over into Schwab accounts in the fall. They are doing away with their platform and keeping the Thinkorswim platform. So it's
really safe. Okay. So
they'd be crazy to get rid of it. I'm sure a good chunk of their people want the platform itself.
Street Smart Edge is absolutely atrocious as well. So it's a win-win.
All right, I'm gonna hand it back off, Bobby. Go do your show. But now you have the magical blocker.
I mean, Ed, that's amazing though. Look, that little thing right there. How about
just
that?
Just remember, the old man came up with it on the fly.
The old man was so excited last night. I mean, honest to God, I thought he was going to have a cardiac right there in there. He was so excited. Ed, I'm excited though. That's cool. That's really cool.
All right, cool. All right.
All right. So that other count, I could do something, but I got to call them back because my thing is messed up. So this one is 83,271. Go put that. That seems like we're down in this one, doesn't it? 83,270. No, we're up a little bit. 83,271, baby. Fire up the band, Roger. Yes, we are. All right, so we are up $343 today. Love it. All right, we got rid of that future yesterday. That was a good idea, wasn't it? So our deltas are 50, right? We got to combine this with the VIX. So we're at 50 deltas and we're at 74, 50, 74, 50, 74. So, hey, why in the flip is that not pulling down my thingy? Hey, wait a minute. Oh, I'm in the wrong one. Sorry. 50, 74. Been a long day, y'all. And if y'all notice, I got dirt all over me, just because I've been to the feed mill. Now, some of y'all don't know what a feed mill is. That's where you go and get your dog food, your pig food, your cat food, your kids' food. You can buy wormer. You can worm anything in your house, humans included, at the feed mill over in Ramburn, Alabama, just right down the road. That's where all my friends used to be. All right, so our buying power usage is 22,402. Now, you're sitting there going, Bobby, the market's up. I don't care. I need a trade. Look at this. I do not have enough gas in the old tankola. Plus, I said that now our charts are kind of bullish, aren't they, for the next few days? So I need to put some gas in the tank. So we'll go build a trade over here, even though I can't trade in this account because I got to still get that worked out. So let's see where we're going to go. This should be 61 days. So we'll go here. I said we'll go here and we'll go to long put vertical 50 wide. And we'll get that down. Where's all my stuff? Unbelievable. Long put vertical. Where's all my stuff at the bottom? Oh, here it is. 40, 10, 40, 60. Move that to where it is $10. Having a rough day, y'all. So I was supposed to go to my son's student-led conference with his teacher yesterday, Devin. Guess who didn't show up? Guess who forgot it? Me. And then Beth fusses at me. You can't forget your kids' conferences. And his teacher was like, where are your parents at? He's like, they must have forgot. So I went and checked him out of school today, took him for Chinese, took him for, he's a 13-year-old. He wanted a milkshake, got him a milkshake. We've just been hanging out since I forgot his student conference. His lowest grade is a 98. And I said, we're going to have to talk about this. You cannot be bringing 98s. The Gaines household is a family of mastery. You got less than 100. We need to talk. Now, what was I doing? Oh, yeah, we got to do it in this account. Sorry, y'all. So here we go over here. We're going to trade the same thing. I love this new little thing that Ed found. That's really cool. So MES, we're going to go out 61 days. Oh, we got some managing to do today, y'all. You're going to love it. All right, so managing. So here we are, 61 days, and we're going to do the 39.40, 38.90. 39.40. This is what you call a put debit spread. 39.40, 38.90. What do you say we do us a two-lotter? You want to? You want to? Let's do two of them things. I said let's do two of those things. My gosh. You stupid little. All right, I'll go 10 1/4. I'll see you, Johnny. I'll raise you. All right, we are in, baby. All right, so let's go put that in our spreadsheet because we got some maintenance to do. All right, so we're going to sell some nakeds. Can everybody see that good? Make sure it's big enough. If it's not, let me know. So we did a 2 trancher and a PDS. We'll call this PDS 36. And we did the 39.40, 38.90 puts, debit spread, 61 days, and the year of our Lord is 3/31/23. I thought I put a trade on yesterday in this account. Did I not? No, well, I thought I did. Did I not record it? Okay. Anyway, so we did that for 10 1/4. All right, so that cost us $108.38. So now we need to sell some naked stuff. So with my stuff, I think what I'm going to do is I'm going to do a 1-1-1 today. Evan was talking about yesterday, hey, we might want to do a 1-1-1, so less notional value, you can roll down into 2. I think I'm just going to do a mix of them. So let's do a 1-1-1 today. So I'm looking for about 20. Let's try to get this 36.70 for $21. And let's move that up to 21 1/4. And we're doing a 2 trancher, so this will be a 1-1-1. So we'll do 21.25. Beautiful. 36.70 for 21.25. 36.70 for 21.25. All right, so we did a 2 trancher. That's a 1-1-1. We'll call this NP36 for naked put. Puts naked 61. In the year of our Lord, 3/31/23. Beautiful. There we go. There's our little trade in. I think I missed yesterday's trades. Anyway, who cares? All right, so let's go put those in their groups, and then let's do some what you call management. So let's go to monitor. Let's go show our groups. Here we go. Show groups and unallocated. So we've got some T-bills we need to put up that came into our accounts. Let's put those up, T-bills. And then we got some MES stuff. We got a 222. So our 36.70 is a naked. Move him to the nakeds. And then we got this vertical that goes to put debit spreads. Okay. Now, did I take off all my futures? I thought I did. Yeah, futures are gone. All right. So now we got some management to do. Now, this was causing quite a ruckus in our room. My little sheet says, I've got it set up to tell me to close stuff if it gets down to 21 days. Okay. Now, first of all, these put debit spreads are all coming off for a loss. So I'm going to put 0 there. 0 here, right? Because they're the losers. The market's outrun them. Those are all losers. So I'm going to put zeros there. Got all these put debit spreads coming off at the end of the day. See if that's all of them. Oh, I don't have the new thing in this one that shows me when to close them. That's why. Okay. Well, let me fix this up anyway. So this one will be all red. Now, y'all are going to see in the other account, I've got that spreadsheet all fixed up. So we're going to make this red. And then we're going to go Format Painter. Okay. And then we're going to go and do the rest of them. So we'll do this is red. And we'll go, got out on 3/31/23. Today is roll day, y'all. 3/31/23. Y'all understand what I'm doing now? I just want to make sure everybody knows. 3/31/23. 3/31/23. We're basically saying these things have expired. But Bobby, the day ain't over. I don't know, but come on, y'all know these ain't coming back. 3/31/23. 3/31. Yeah, I could do this by myself because I know this is riveting entertainment, but you know, who cares? So let's go here. Let's go Format Painter. Let's paint this one the same. Let's paint this one the same. I said let's Format Painter. Let's paint that one the same. Let's go Format Painter. Paint this one the same. Making them all red. This one, Format Painter. Paint this one red. Format Painter. Paint this one red. And I think that's the last one. Yep, that's the last one. Now, in the new spreadsheet, which y'all don't have, what this would say is because of this, well, that's a put debit spread at 21 days. This one is a debit spread. We don't do anything with them. That's a debit spread at 21 days. That's a negative with 49 days. That's a negative with, well, I don't have anything to manage over here. Okay. Okay. Days left in trade, there's nothing to manage.
Since we're on the topic of the 21-day roll, what made you shift back to that? Because I know about 6 months ago, you stopped rolling them at 21 and you were holding them to like 99% profit or expiration. So what made you want to roll at 21?
I was lying in my bed in nothing but my underwear, laying in the fetal position with a Diet Coke beside me and a bright light shone down upon. No, I don't know. That's a good question, Evan. I don't know. I don't know. I was thinking that, you know, we figured out that it was good and you could hold these things to expiration, but I thought at the same time, does it really? I don't know. I don't know. If you want to play devil's advocate with it, I would love to hear your thoughts on it.
I can tell you why I'm no longer doing that.
Yeah, I would love to hear it because I'm very impressionable. So yeah, share with me.
So with the T&D campaign, we quickly learned that on an up month where everything is just going in our favor, rolling back out to 90 and collecting more theta is good. We also learned the following month when the market starts to pull back, all of those freshly rolled positions feel a lot of pain compared to the more mature ones. So if we're constantly rolling at 21 days, we're going to be giving back some of that credit from when we sold it. But I think we're also going to feel a lot more volatility. And that's kind of what we saw with the TND. If you roll when things are good, that's great. But these positions are the most vulnerable right when you put them on. unless your strike is breached, right? If you're at 21 days and your strike is breached or you need to roll, then I get that. But I think if you're at 80 or 90% profit, it makes more sense to just pull it off and start over versus rolling it back out.
Okay. Anyone else on the discussion of this? It's a great discussion.
I forget who it was, but somebody pointed out the fact that these do best when you hold them to expiration. So
I have a comment I'd like to interject on that, just to talk. This is Eliza.
Oh, I love Eliza. I love hearing Eliza's voice that I used to hear every day. And then I don't hear her anymore. Good. Hey, Eliza.
Hey there. So I think that it might depend on your strike selection when you roll and what DTE you're going to roll to, because 60 doesn't have the same vol stuff that 90 does, I think. So it does react to volatility, but the 90 days really enjoy that enhancement when the volatility explodes.
Say that last sentence one more time.
I think that you really see a bigger proportion of change in price when volatility explodes when you're at 90 days or higher. So maybe 60 or but less than 90. But again, I think it depends on your strike selection, what you're going to pick. I mean, you could roll to a lower strike for the same credit or just a little bit higher. I mean, just depends on how you do it.
So are you saying instead of rolling out at 20, so you're saying at 21 days, roll it out to 60, but instead of bringing in another $10 of credit, maybe you just bring in the same amount of credit?
Well, it would. I mean, of course, it's going to depend on what the VIX is. But yeah, I mean, just roll it out a little bit in time and try to, because in theory, you'll be able to roll to a lower strike for basically the same price, the same credit.
Okay, but then that would be taking up your buying power for an extra 40 days, right? So, I mean, I guess that's kind of where it's up to the individual and where the portfolio is, but I would imagine you would want to get out of that.
Well, you're closing one and opening one. So, it might be a small difference in buying power, but,
You said for the same credit though, right?
Well, I'm saying if you can close it for 10 and then you can go out 60 days and find for 10 or 12 more dollars or something like that. I mean, yeah, why not do that? You're further out. You can get down further away from the money, and it might be a safer spot. That's the only thing I'm thinking.
Okay.
I love the discussion, y'all. I love the discussion. And thank you, Eliza, for bringing some of those points up. So
you can roll it out to the same strike or down a few positions. It lowers your buying power.
Okay. Yeah,
I always like rolling the naked out and down and taking in about the same premium, unless I want to take an extra premium to buy another put debit spread in that new maturity where I've just rolled, in which case I'll do that as well. So it kind of depends on how I interpret things at the time. And if we're now rolling, and if we're rolling at 30 delta now, that probably, I mean, I wonder how many positions we're still going to have on at 21 days anyway. And I guess it really is going to matter, because I know some people are taking them right to the finish line like they were before and probably are again now. And again, there's really no wrong answer. Trade what you're feeling comfortable with. But when I'm in a situation where I have to roll as a defensive measure, I'm not thinking profit. I'm thinking cover my rear end. So I do like to push it out and down. And with ES, you don't have to go far. I mean, a week, 10 days, you can roll that thing out and get yourself a few percent away in high vol times, usually is what I see. And that's kind of my main concern. And then I have that put debit spread that was quote attached to it as a tranche unquote, which was really just a campaign feature along with all the other put debit spreads in the account. So I don't always feel compelled to put on a fresh put debit spread when I roll, but sometimes I do. And that's going to be the trigger on whether I collect any credit or much credit. I'm not saying I don't take $1 or whatever, but I'm not looking at bringing in additional premium when I roll. I just want to get that thing as far away from the blast zone and let things settle down and move on. I'm not looking at it as a fresh profit center for the future, if you will.
Mm-hmm.
So, Bobby, are you talking about rolling losers at 21 days or winners?
Anything.
Okay. I was under the impression that you were talking about rolling winners. So with the TND, we were saying, oh, 60 days, we'll roll our winner back out to the 10 delta or whatever. I thought that's what you were doing here. It seems like Eliza and Ed are on the same page. They're talking about rolling losers.
Yeah.
And I agree with both of what they're saying. If you're at 21 days and you have a loser, yeah, roll it out. That makes a lot of sense.
Mm-hmm.
I
Well, let's
misunderstood.
start
I thought you were talking about rolling winners. So
Oh, I'm actually talking about rolling everything at 21 days. And then if it's tested, then you do the 30 delta. When it's tested, you go 30 delta and roll those. But I'm talking about rolling everything at 21 days.
I like that as a defensive measure. That's basically what you're saying. You're just proactively being defensive and rolling everything that hits 21 days.
And that's the way the spreadsheet is set up. So you'll see I've got one today, right?
But I do want to say also, I'm sorry.
No, go ahead.
I don't want to sound like I'm supporting the 21 day. I'm saying if it works for Eliza, I can't pick it apart. I don't think it's bad. I don't think it's what we've determined to be best practice, but I don't know what our best practice for the whole community is, because some people are taking it to expiration and some people are selling 90s and taking it off at 60 and moving on and putting another trade on. So I don't know how we generalize, other than in the past, I've said that if you run a campaign of this stuff and you get a little fleet of put debit spreads left over from positions where you've removed the naked put, it does provide that gamma protection to some extent for the campaign. I do think gamma is still there. I just think it has to get nearer to the money before it starts getting crazy, like even the last few days, because you're in the tent and the tent is very resilient at protecting some of your loss in the last week to 10 days, especially the last few days. So if you're way in the tent, the tent money is cranking up so much every day, it's going to offset some of the loss of the naked put at that point. But if the price action approaches the naked put, the end of the tent on the left side, I think that's when gamma explodes, because that's when we plunge down into the red zone of the 1-1X. And that's when it's almost like there's a break on gamma versus just a raw naked. And then the break stops working and it just whoosh, like it'll whoosh. Gamma would, and become more magnified because it's in the money. Basically, your short option is now in the money. So, I don't think there's much you can do to prevent that other than maybe doing a futures to neutralize it. Anyway, I'll hand it back up. I am not endorsing or condemning the 21. I don't think I'm going to do the 21, but I listen.
Yeah.
I mean, I'm not knocking it. And I do think, like you said at the beginning, Bobby, some people, I think you said it, some people want to take positions off at X%. Some people want to do whatever. Like, I think any plan that you have that seems to be functioning for you is good. So if Eliza wants to roll everything at 21 just to get it out of that, kind of like out of that blast zone, if you will, what's wrong with that? It's a 1256 contract. Win, lose, or draw, you roll it out and reposition your theta. You either want to keep all the theta or you want to reduce it at that point in time. It's the gain and the loss is quite as critical from a whole portfolio standpoint. All right, I'll hit the pause button. Go.
Well, here's the weird thing, y'all. So while y'all were doing all y'all's analysis and stuff, I just looked. It says that I've got 3 there. I only find 1 in my thing, which is really weird. So I must have closed those at something else. Who knows? But let's pretend that we just got 1 now, because that's apparently all that I've got, right? It's at 21 days. I've got 1 36.30. I'm going to say in to close it. Let's just look at it. Let's take a snapshot. The 36.30 on the Analyze tab, that's the only thing I've got marked here, right? 36.30 is giving me 231 in theta. It's got a little bit of delta, and it's taking up $523 in buying power. So why don't we snapshot that? Let's take a snipper snap of that. So we'll know what our 36.30 is giving us. Right? That's what our 36.30 is giving us. So let's close our 3630. Okay. Let's just close it. I'm not rolling. I'm just going to close. So let's close my 3630. So that's the one we're looking at today. Our naked put, right? It's at 21 days. So we're going to close this. It's at 89% profit. Buy it back for, let's try the 285. Try 290. We'll work it up. I got all the time in the world. I'm retired. I got nothing else to do. All right, here we go. We'll work it up to 295. Come on, somebody, before y'all go to the Hamptons, buy my darn option. Y'all know y'all want some insurance over the weekend, you Hamptonites, or those locally who are going to Lake Wedowee over the weekend to start your spring break. All right, it's going up all the way to $3. Okay, so we're out at $3. I don't know how to do this. I'm just gonna put I closed all of them at $3. So here we go. Closing price is $3. All right. So we closed it 3 year of our Lord. I must have closed those others at some point. I'm sure I had 3 on at the time. Okay, so that's good. We closed out of that. So what would I do? That was a 111, right? So I would replace it by going 61 days. And I would sell something if I was doing 111 for $20. Now remember, here we go, 3670. So let's do the 3670 for 2125. Come on. Let's work our order. All right, there's a 3670 for 21. Let's go put him in the spreadsheet. 3670. We did a one lotter. 3670. What was it? 21. 1, 2, field orders at 21. Where's 21? 21. So we'll call this naked put 29. Puts naked 61 days, 3/31/23. Okay, so we brought in $103 there on that one. Right now, here's what we need to do. Let's go find that 3670. Is that the mail, honey? I tell you what, when you got a woman who will come home after a hard day and bring the mail up to you, you got you a good one. What are you looking at? All right, Beth. Don't take too long of a break. You got work today. All right, so 3670. Let's go find. Is that how many y'all hid today? 5 Easter eggs?
500.
500 Easter eggs. Let's put this in. Let's see. Let's go move to group naked puts. All right. So let's now go analyze our 3670 on 2. Let's see what it did for me. Hey, baby, what you got? Oh, my goodness, a drink? What is that? Prime drink. Is it got any calories in it? 25 calories. Can I tell you? Nobody at school drunk out of this, did they?
They were hot and thirst. Are they good?
Woo, girl. That's going to turn my hair pink. All right, so we sold the 3670. Let's go find him. I guess that's this one, huh? Price 29.25. It can't be that one, can it? Where's the 3670? 3670. Can I not analyze the position? Let's see. 3670. Analyze. I don't want to analyze. I can't think, y'all.
What?
It's in the 36 May 23 end of month. Let me go find it again. Hey, turn that down, Beth. You're interrupting my group. How many 3670s do I got? 3670. 3670 end of month. That's got to be it. Make sure I don't have any more. 3670s. 36, 38, 38, 3670s end of month. That's it, isn't it? The 21. Yeah, let me get this one. Got to make sure you get the right one. All right, let's compare. So we got it. So we went from theta of $2.31 to theta of $2.93. I like that. Taking up $729 of buying power, where this one was taking up $523. So, I mean, and we went from a 36.30 to a 36.70. So we did roll in closer, right, to the money, because it was 36.30 that we closed. So I don't know. What do y'all think? But we were at 21 days. So I moved it out to 36.70. So we're closer to the money, but we improved our theta. I don't know.
So you're closer to the money now
Mm-hmm.
with longer time in trade. So
With longer
that
time in
definitely adds short vega
Mm-hmm.
and a higher delta. So, I mean, if your account needs long deltas and you need that little bit of theta, then I guess it works. But I feel like you added a lot of risk by doing that, and that's when we start to see the fluctuations. Like with the TND, one day we were up 1% and the market was up 1%. The next day we were down 1%. Is kind of my interpretation of these metrics.
Mm-hmm.
But I mean, I guess it all depends on what your account needs at the time that you do the roll.
Yeah. Because, you know, the gamma risk, we really kind of figured that, okay, so Candy agrees with Evan changing the original probabilities. So Candy, you think we should have just left it on and not rolled it out? I mean, the only thing that I do like is that we added theta. I needed theta in the account. Didn't I need theta? Let's see. Did I need theta? I don't know if I needed theta or not. Let's see. Greeks and ratios. No, not really. So let's see what our new things. Oh, I did. Since I had negative deltas, I did take off my future. I did take it off. So now my theta, my delta should be at the higher range. Let's see. Let's go back to monitor. See what we look like here. We're at 55 minus 3. So we're at 52, 42. Let's look at that. 52.42. We're a little long. 42. We bumped that up $1. 52.42. Buying power was 6,800. Now my buying power should have gone up to 8,300.
Yeah, 160 calories.
Yeah, I don't know. I mean, y'all bringing up good points, and I mean, I think it's a good point on whether to, pick your poison and just go with it.
So
Oh.
I think Eliza brought up another point here. She said she would roll to a lower strike and collect an extra $10 to $12.
Mhm.
Didn't you bring in a credit of like $20 on that one?
Yeah, I brought in $21.
So you could put on another put debit spread and that would make it a little more conservative. Or
Mhm.
if you wanted to just roll the naked, then maybe you put it at a 5 or a 6 delta instead of a 10 or 11.
That's exactly true, right? I could have gone out to the 36.30 and replaced it.
That would have brought in more theta, a little
Uh-huh.
bit less risk.
Yeah.
You'd still have the same extended time in trade.
Yeah. I just think figure out a best practice for you and go with it. I don't know. It just seemed easy to me. I mean, Tasty has done so much research on the 21-day thing. I think it's playing a role in my decision making.
Hey, Bob, this is John. I got a question,
Hey, John.
if you don't
Hey,
mind.
can y'all be quiet just a little bit? Daddy's in a session. Beth, you're the loudest one of all, hon. I'm in a session. I'm not going to kiss your tail. Okay, sorry about it, John. Go ahead.
No problem. I just need to complete the picture in my own head. I don't have an opinion one way or another right now on the closing and the rolling. But if I understand this correctly, you're closing a trade, in this case, for a profit of whatever it is. It's less than what the original trade was put in for.
Mm-hmm.
And you're rolling it and you're collecting a credit. Now you're talking about how big a credit you should collect and that sort of thing. For me now, to complete the picture though, when are you gonna match that naked put? Maybe you don't match it, but when do you put on a new PDS? When the existing one expires, so that you don't always start getting long naked puts? I'm seeing short naked puts. That's the point for me, is you're not closing the trade as a combo. I get that. You're treating the naked separate from the PDS. But if you roll a 21, which means your PDS has another 21 days, that one's going to expire. Are you putting on a whole new trade at that point? And now you've got a, 39-day naked put that's all by its lonesome?
Yeah. So you bring up a very, very good point, John. And what I want to do is to keep a 1-to-1 ratio of my naked positions and my put debit spreads. That's what I need to do. I feel like that is best in my thing. So the problem is I've got to update this formula now because I'm doing 1-1-1s. That was a 1-1-1 that I rolled. So I didn't do a 1-1-2. So I've got to do the formula. So the formula is going to be this: sum if the trades, let's see, what is that? The sum range trades of BB, trades FF are naked and divided by 2. So I've got to now go back and basically determine how many open positions do I have, not how many naked options that I have, but naked positions. So let's go back and see how many naked positions we have. All right, so here we go. Let's do that. That's good. And we'll see how many put debit spreads. And I got to fix the formula in the spreadsheet. So we've got one naked position. So I'm calling that, even though it's 2 tranches, that's a naked put, right? We got a naked put there, 1 naked position, 2 naked positions, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, right? We got 14 naked positions. And how many put debit spreads do we have? We have, so 14 of those. So we got 1, 2, 3, 4, 4. It's 14-4. So what it's saying is, hey, Tubby Tub, you need some put debit spreads in the account. That's exactly what it's saying. That's exactly what it's saying. Now, I've got to now fix my formula over here to realize that I've got 14 naked positions, and I've got 4 put debit. No, the put debit spread should be correct though. Oh, it is. I've got 6 of them because it's actually counting the number of contracts, and that's right. So it should count number of contracts here. It should count number of naked positions, whether they're 1-1-1 or 1-1-2. So I actually do have 6 put debit spreads. So I do some put debit spreads. So why don't we go do that? Let's go put in a couple.
You've only got 4 put debit spread positions, though. They would have, you had a 2 tranches, then you would have had had 2 nakeds against it. One, I mean, 4 naked contracts.
Yeah, the point for me, Bobby, is you're accepting, when you roll it 21 days, you're just accepting less credit, assuming that's it is a credit, not a problem child. You're accepting less credit than the original plan, which is fine. And my thought is, oh, well, then are you going to put on a whole new trade with the new naked at 60 days, leaving that extra PDS to kind of give you extra protection?
Say that one more time.
Yeah. So when you at 21 days close the naked put, and we're going to say we're closing it for a credit, you're going to put a new naked put on at 60 days in that area.
Yep.
My thought was, are you going to also put a PDS so that you know you've got the same number of open positions and PDSs, and just let that existing PDS that still has 21 days to go, let that protect you for another 21 days, let it expire worthless. And so you're actually at some point going to have more PDSs than you do naked positions.
Yep.
But you'll have that protection. And if you don't do it that way, which is what I'm worried about right now, is if you just keep adding nakeds without adding PDSs, you know, at what point do you, I know you're going to make your spreadsheet say it, but even with the mixture, you know, how protected are you is, I guess, going to be the question.
Mm-hmm. Yeah, I think I got to keep an eye on this, right? I've got to keep an eye on making sure that I've got enough put debit spreads for whatever the naked positions is. I think I think I got to do that. Or I prefer to do that. I want to make sure that the number of put debit spreads I have on is equal to the number of naked positions that I have on. And so we could fix this formula. For right now, until I fix it, I should fix it today. That's my plan, is I'm going to fix the formula today. I will go into the meditation room and, you know, take me a couple Advils and come back, and maybe an Adderall and a venlafaxine, and I will come back in and be able to come up with that formula that'll tell us the number of naked positions and put debit spreads. But that was great, that what we just did. It was good going into the thing and going, hey, I don't have enough put debit spreads, you know?
And let's just say this was the first 21-day signal you got to start closing nakeds.
And it was.
Well, and so therefore, if you did what you just did in the beginning before we had this discussion, you would have a PDS out there. You'd actually have that matched up to the new naked put, and you would have the same number of PDSs as you would naked positions. And in 21 days, you wouldn't. You know, that's the point. So now you got to keep an eyes on your PDSs, because when you don't, well, you got to figure out how short do you want to be.
Well, you should have more put debit spreads over time, because if you roll the naked out, you still should have the put debit spread that was originally put on with it still on the book.
For 21 days without a naked.
Yeah, for 21 days you will. But then when that thing expires, unless you're putting on a new position based on the PDS expires, you will not.
Well, that's right. But what you should eventually end up having more put debit spreads on than you have nakeds.
Yeah, I agree 100% as you move through this, if you keep rolling them, depending on how your positions are spread out. But there's got to be a point where those things come off the board. And if you haven't replaced them, you've got longer dated naked puts that are going to make an imbalance, I believe.
What a great discussion we're having. Isn't this fun? Where else can y'all do this crap? And this is good. So now by doing that, I'm at 44. My theta is at 41. For those of you that like to keep that 1-to-1 delta theta ratio, look at this. I mean, I've got it, baby. Look at this, 41. And now my buying power after putting those 4 put debit spreads on is only 78.64. Look at this. I love this. Oh, man. That's great. Now, let's see where our account should be in a couple of days, right? Let's look forward, see where our account should be. So now let's go to the Analyze tab. We're making, oh, I forgot to play the Jeffersons, y'all. We're up in this account. Let me play the Jeffersons. We got into. Yes, hallelujah. Thank you, Lord, for all your many blessings and allowing the account to go up. We don't thank you enough. Amen. All right, here we go. So let me take off these little thingies here. Let's keep the VIX in there. All right, so here's what we look like. Let's see how much extrinsic value is going to come into the account. This is the expiration on 4/1. Let's see, this should be moved to 3/31. Here we go. So let's do 4 expirations. Now, the thing is, we are in 7 expirations. You need to realize that. So this isn't going to show us everything, but here's what we should do. P&L day, we're up $197 today. By tomorrow, that's weird, we should be up 230. By the 5th, we should be up 410. If we hang here through the 12th, that's 12 days from today, we'll be up 665. And 14 days from today, we should be up 721. Let's look what it looks like. Keep in mind that 721 figure. It goes down a little bit. If we go down 5%, right, goes down, but it doesn't go down all that bad. So what I did today is I beefed this up a little bit, right? I beefed my downside up with a few extra put debit spreads. The only problem is I'm not sure that this is even showing those put debit spreads because we're in 7 expirations instead of 4. And my longest expiration is 61%. So this team isn't even picking those up. So it's kind of hard to get a full picture over here. Okay, Paul, excuse my beginner question, but the purpose of the put debit spread is to protect the naked put. What else is significant of the put debit spread? Yeah, that's really it. Remember, in the progression of chess, we have said that it starts out as a pawn. It ends up going to a bishop, to a knight, to a rook, and finally to a queen. It gets really strong at the end. So it gives you dynamic protection that increases the farther along it goes. Do I have some that, well, I've got some that come off today in the other account. I started to say, what would it look like if, but it is, it's for protection. It looks best if you see it in this, right? Here it is. This is what the monster becomes. And that's why you can sit here and go, wow, go up market. I don't care if you go up, we're going to keep our money. We're going to make our $781 regardless. The market goes up and we want the market to come down. Look at that. Come down a standard deviation. Just don't come down too fast, right? But we want the market ultimately to settle down here. 2 standard deviation move down is where we start having issues. All right. Okay, good session. We're about to go into Muscadine Mafia session. Today's session will be for Muscadine Mafia and Hello Ladies game. So we will stop that now.